I think what's going on is investors in the public markets have defaulted to benchmarks, which are all about the past. They're selling our stocks. Our stocks are not in benchmarks. And we're proud of that because our stocks are the future and they will make up the benchmarks in the future.
Founder, CEOs, and CIO of ARK Invest, Cathie Wood is well known for her stance against traditional benchmark stocks. Instead, Wood believes investors should be betting big on futuristic innovations such as blockchain technology, artificial intelligence, DNA sequencing, electric vehicles, 3D printing, and gene editing. Her investment management firm manages several actively managed exchange-traded funds, currently with around $23.9 billion in assets under management. The investment management firm focuses on disruptive technologies that Wood believes will see exponential growth within the next 5 to 8 years. In a recent interview, Wood explains that the source of her conviction about how fast the disruptive technologies will grow is the company's research. ARK's research shows that these disruptive technologies will shape their respective industries and see explosive growth within the next 5 years. Wood also points out that ARK Invest's stocks might be down 60% now, but that is from a peak of almost 400% growth in February 2021. This means that there is still a possibility of exponential growth for each technology. Our stocks are not in the benchmarks. Our stocks are the future, and they will make up the benchmarks of the future, Wood adds while describing the difference between today's benchmarks and ARK Invest stocks. We will bring you Wood's interview shortly. Before we do, please take the time to like the video and drop your comments below. We appreciate all our viewers and subscribers for their immense contribution to our growth.
The most important source of conviction is our research. We are doing research on innovation that I believe no one else is doing out there, at least in the way that we're doing it. We're trying to figure out the learning curves associated with new technologies, how fast the costs will fall, and how quickly these new technologies will grow. So the source of the conviction is our research. And the second thing we have going for us, I think, we're the closest you'll find to a venture capital firm in the public equity markets. And I think our asset retention, many people think we've seen huge outflows. Our asset retention has been remarkable. And I think it is because we give our research away, unlike most, and we are educating our clients about these amazing growth opportunities. And I think especially, well, it's all demographics, but especially the younger investor sees the ground shifting underneath our feet. And, they've stuck with us. Just one other thing I'd like to do is put into perspective. So with this 5-year investment time horizon, we have delivered north of our minimum hurdle rate of return, which is 15% over a 5-year period. We are down 60% since the peak. However, from the bottom of the coronavirus crisis to February of 21, we're up 358%. So it's really important to put that in perspective.
And that's a core part of your investment philosophy, right? It's this long-term time horizon, right?
Yes.
There are different types of investing. There's short-term investing, there's long-term investing, and it's up to the investor in many respects to be able to diversify and balance their portfolio accordingly.
Yes, and there's a very interesting thing that's happened in the last year. As our performance was down 60%, if you look at how innovation was priced in the private markets, over the last year, up 20%. Think about that. What's wrong with that picture? And I think what's going on is investors in the public markets have defaulted to benchmarks, which are all about the past. They're selling our stocks. Our stocks are not in benchmarks. And we're proud of that because our stocks are the future and they will make up the benchmarks in the future.
Wood also talks about benchmark stocks. She explains that the top stocks on indexes are there because of the past. They helped solve problems in the past, which spurred their growth to what they are today. On the other hand, Wood's disruptive technologies provide solutions to problems we encounter now towards making the future better. The benchmarks may have shaped the past, but disruptive technologies will shape the future. According to Wood, the frenzy toward these benchmark stocks today signifies the most massive misallocation of capital in the history of mankind.
I believe that this shift towards passive and benchmark-sensitive investing, meaning, mimicking indexes, which is kind of mindless, is very backwards looking. The stocks at the top of these indexes are there because of what has happened historically. I believe this is the most massive misallocation of capital in the history of mankind, especially, I don't know if, can you hear me? Because that's a punchline. This is one of the most massive misallocations of capital in the history of mankind. We have ahead of us the most magnificent opportunities because of the massive amount of innovation that's taking place, and yet the fear has pushed investors back to their benchmarks. And I think,
not all investors, right? You told me you have nearly $1 billion in inflows since January 17th.
Yes, thank you. And that's in our flagship fund, $1 billion in inflows. And I think many people are saying, innovation solves problems. We now have a lot more problems. That 358% increase during the coronavirus is because right before it, we were slammed. We were slammed because of risk aversion. Once again, everybody going back to their benchmarks. And then everybody woke up one day and said, wait a minute, innovation is going to help us solve these problems. And we certainly were beating that drum. And anyone who got in near that low had a tremendous ride. I feel we're back there again. And now with the Ukraine-Russian issues, again, we have many more problems. Certainly when it comes to oil, this is only going to accelerate the push towards electric vehicles and autonomous transportation.
Which is good for your number one holding, Tesla.
Tesla.
Right.
According to Cathie Wood, fear is pushing investors away from investing in disruptive technologies despite the massive opportunities in the market right now. This is especially true for the older generation who choose less volatile asset classes, albeit with far fewer returns. This is certainly understandable as their time horizon is far shorter. Younger generations with longer time horizons must take advantage of these great opportunities to prepare well for the future. Remember, it might be a once-in-a-lifetime opportunity to position yourself correctly and prepare adequately for the future. Be greedy when others are fearful and fearful when others are greedy. Thanks for watching the video. Remember to drop your comments below and hit the smash button. Till we bring you our next video, stay savvy.